It's a Tap That Trade Day. Alan Nuckman, the chief market strategist for St. Paul Research, and Phil Flynn, a Fox Business Network contributor, are here for our Trader Game. Round number one, guys. Seasons and reasons. Analysts are suggesting the next 3 months could be weak for the stock market. What is your seasonality strategy?
Well, seasonality, if it was that easy, we would just do what the seasonality tells us. It's not that easy. No one's ever been able to time it, especially time it based upon the season. Yeah, we could see a pullback in the marketplace, and there are some concerns with this lack of market breadth. But we are coming into the end of earnings season. Sometimes you see a bit of a pause as we look forward to the next earnings season. But we're in a bull market.
Yeah, make no mistake about it. We're in a bull market. In fact, Goldman Sachs upped their target for the end of the year. They're saying earnings are going to be incredible. But that doesn't mean you should ignore seasonals. Not necessarily for the overall market, but seasonals do impact the prices of stocks and the prices of commodities. I'm sure if you're selling ice cream, you don't want to be doing it in January in Alaska, right? Okay. So the seasonalities for ice cream is not very good when it's cold. But in the summer, if it's hot, you're going to be selling that ice cream like crazy. So seasonals have a lot of different companies that are impacted it, and sometimes it can impact the entire market. But when the overall fundamentals like we have in place right now in the stock market with low interest rates, economic growth, those seasonal factors get ignored a little bit, and we continue on the trend that we were in.
Ride the bull.
Round number two, hot ice cream. Will higher priced ice cream cool the stock market?
I think it could. No doubt about it. No. Come on. What do you mean? The ice cream? Ben and Jerry's, come on, dude. What are you doing here? There are prices of inflation. You're right. As we're seeing inflation, could that cool the stock market at some point?
Hot summertime. We talked about this weeks ago. Natural gas is a hot summertime play, and it could still go a lot higher. Natural gas is at 4, but it was at 15 back in 2005. So LNG is a stock I like. But if you want to look at ice cream stocks, which Shake Shack is 30% off its January highs, and Wendy's, you can't go to Wendy's without getting McFlurry. No, that's not what they're called.
A Frosty.
That's it. You can't go to Wendy's without getting a Frosty. Wendy's stock is 25% off its June high. It's back inside a channel trade between 20 and 25 for 1 year. And so if it breaks out again, 30 is a target.
Yeah, actually, natural gas play, not only is it being driven by hot weather, but the lack of production and record exports. In fact, this season, going into winter, normally that's where we see the highest demand for natural gas. Our supplies are going to be the lowest they've been in 10 years. So this winter, you better, save a little extra money for your heating bills because they're going to be a lot more expensive.
So what you're saying, Phil, is this was counter seasonal. It's not that easy.
Well, the fundamentals for natural gas have changed. It used to be, mainly just a heating market where you would heat your homes. But that's been transformed. We're using electricity more and more driven by natural gas as opposed to coal because it burns a lot cleaner. So the fundamentals have changed over the last couple of years. And then you bring in the fracking revolution, of course, in natural gas. We became the biggest producer of natural gas in the world. That's changed a little bit, but we're still producing a lot.
Round number three, materials or movers. The industrials and materials stocks have had big pullbacks following a monster rally run. With all the talk about the infrastructure bill, which one, the XLI or XLB, is in for the biggest bounce?
Both. I like XLI, which is industrials, better. It's trading between 100 and 106 now here for many months. That tight channel targets a breakout. I'm just a chart guy, and that's what the charts tell me.
Yeah, I think they're both going to go up. We're going to have infrastructure spending. We're going to have low interest rates, even though there's a risk that interest rates will go up next year. And we're rebuilding the economy. So you put that all together, both the industrials and materials are going to rise. Now, we've seen a pullback in materials recently, right, especially in copper because of a crackdown in China. But, I like, the mining stocks right now, and Rio Tinto is one of my favorites. And that might be one that you can really get going on this infrastructure play in the materials play as well.
Here's your bonus round question for today. Can you name the newest female billionaire entertainer? Will it be Rihanna, Taylor Swift, or Beyonce?
I got to go with Taylor Swift. I was going to say... what I was going to say is Reese Witherspoon because she just sold her production company for a lot of money, but she's not on the list. So I'm going to have to go with the one that I went with.
I know the answer.
Taylor.
It's Rihanna, but I am intrigued by the lady that sold that baby care line for $1 billion.
The answer is Rihanna. She shines like a diamond on the Forbes list. Thanks so much. That was great, guys. Business First AM continues right after this. Go to businessfirstam.com for where to see our show on TV.